A doggy named Charlie wakes up every morning at 6 a.m. He goes to work at the bone factory. He works hard for 8 hours. At the end of the week, Charlie gets his paycheck. He earned 1,000 biscuits this week. Charlie feels proud. He worked hard for those biscuits. But then, Charlie looks at his paycheck more carefully. The amount says 1,000 biscuits earned, but the amount he actually receives is only 700 biscuits. Where did the other 300 biscuits go? Taxes. The government doggy took 300 biscuits in taxes. That's 30% of everything Charlie earned. Charlie sighs. He needs those biscuits for rent, food, and bills, but the government took them before Charlie even saw them. This happens every single week, every single paycheck, 30% gone. Charlie accepts this. Everyone pays taxes, he thinks. That's just how it works. But Charlie is wrong. Not everyone pays taxes. Let me introduce you to another doggy. His name is Rich Doggie. Rich Doggie lives in a mansion. He owns multiple bone factories. He has a private jet. He's worth 100 million biscuits. Last year, Rich Doggie paid 0 biscuits in taxes. Not 30%, not 10%, not even 1%. 0. Absolutely nothing. And it's completely legal. How is this possible? How can Charlie, who earns 52,000 biscuits per year, pay 30% in taxes, while Rich Doggie, who is worth 100 million biscuits, pays nothing? That's what we're going to uncover today. And I'm warning you, this is going to make you angry. Let's start with how taxes normally work. When Charlie works, he earns a salary. That salary is called income. The government taxes income. It's straightforward. You work, you earn money, you pay taxes on that money. This is called income tax. But here's the key thing Charlie doesn't understand. Rich Doggie doesn't have a salary. Rich Doggie doesn't earn income the same way Charlie does. Rich Doggie owns things. He owns stocks in companies. He owns real estate. He owns businesses. These things grow in value over time. This growth is called appreciation. Let me show you an example. 10 years ago, Rich Doggie bought stock in Bone Tech Company for 1 million biscuits. Today, that stock is worth 50 million biscuits. Rich Doggie's wealth increased by 49 million biscuits. But here's the trick. The government doesn't tax that 49 million biscuits. Why not? Because Rich Doggie hasn't sold the stock yet. This is called an unrealized gain. The government only taxes you when you sell the stock and realize the gain. Until you sell, it's just numbers on paper. So Rich Doggie owns 50 million biscuits worth of stock, but pays 0 taxes on it. He just holds it, forever if he wants. But you might be thinking, okay, but Rich Doggie can't spend that stock. He needs biscuits to live. He needs to buy food, pay for his mansion, fuel his private jet. If he sells the stock to get biscuits, then he has to pay taxes, right? Wrong. And this is where it gets really sneaky. Rich Doggie doesn't sell his stock. Instead, he borrows against it. This strategy is called buy, borrow, die. Let me explain how it works. Step 1, buy. Rich Doggie buys assets that grow in value. Stocks, real estate, businesses, art, whatever increases in value over time. Step 2, borrow. When Rich Doggie needs biscuits to spend, he doesn't sell his assets. Instead, he goes to the doggy bank and says, I own 50 million biscuits worth of stock. Can you lend me 5 million biscuits? The bank says yes. They give Rich Doggie a loan using his stock as collateral. This is called a securities-backed loan. Now here's the brilliant part. Loans are not taxable. When you borrow money, you don't pay taxes on it. Why? Because it's not income. You have to pay it back. So Rich Doggie now has 5 million biscuits to spend, and he pays 0 taxes on it. 0. Meanwhile, Charlie earns 1,000 biscuits, and 300 are taken immediately in taxes. But Rich Doggie borrows 5 million biscuits, pays no taxes, and lives like a king. But wait, you say, Rich Doggie has to pay back that loan, right? With interest? Yes, technically, but the interest rate on these loans is usually around 2 to 3% per year. That's incredibly low. And remember, Rich Doggie's stock is growing at maybe 8 to 10% per year, so his assets are growing faster than the loan costs him. He's actually getting richer while borrowing money. And when the loan comes due, Rich Doggie just takes out another loan to pay off the first one. He can keep doing this forever. Borrow, repay with another loan, borrow again. Never selling the stock, never paying taxes. Step 3, die. Eventually, Rich Doggie will die. And this is where the magic happens. When Rich Doggie dies, his children inherit his stock. And here's the insane part. When they inherit it, the tax basis resets. This is called the step-up basis. Let me explain. Rich Doggie bought stock for 1 million biscuits. It's now worth 50 million biscuits. If he sold it, he would owe taxes on the 49 million biscuits gain. But he never sold it. He just borrowed against it his whole life. Then he died. His kids inherit the stock, and the government says, okay, for tax purposes, we'll pretend your kids bought this stock at today's price of 50 million biscuits. So now, if the kids sell the stock for 50 million biscuits, they owe 0 taxes, because their basis is 50 million, and they sold for 50 million. So there's no gain to tax. That 49 million biscuits and gains that happened during Rich Doggie's lifetime, never taxed. Ever. Buy, borrow, die. The 49 million biscuits and gains disappear for tax purposes. This is how billionaire doggies pass massive wealth to their children completely tax-free. Let me show you this with actual numbers so you understand how insane this is. Rich Doggie's stock portfolio over his lifetime. Year 1, worth 1 million biscuits. Year 20, worth 50 million biscuits. Year 40, worth 200 million biscuits. He dies owning 200 million biscuits worth of stock. Total taxes paid on that growth? 0 biscuits. Meanwhile, Charlie worked for 40 years. He earned a total of 2 million biscuits in salary over his lifetime. He paid 600,000 biscuits in taxes. Charlie, who earned 2 million total, paid 600,000 in taxes. Rich Doggie, who accumulated 200 million, paid 0. Now, you might be thinking, okay, but what about all those news stories about billionaire doggies donating to charity? They're giving money away. That's good, right? Let me show you how the charity trick works. Rich Doggie owns stock worth 10 million biscuits that he originally bought for 1 million biscuits. If he sells that stock, he owes taxes on the 9 million biscuits gain. At a 20% capital gains rate, that's 1.8 million biscuits in taxes. But Rich Doggie is smart. Instead of selling the stock, he donates it to his own charity foundation. When he donates the stock, he gets a tax deduction for the full 10 million biscuits. This reduces his taxable income by 10 million biscuits. If he was in the 37% tax bracket, that saves him 3.7 million biscuits in taxes. So by donating 10 million biscuits worth of stock, Rich Doggie avoided 1.8 million in capital gains taxes and saved another 3.7 million in income taxes. Total tax savings, 5.5 million biscuits. But here's the kicker. Rich Doggie controls the foundation. He decides how the money is spent. He can pay himself and his family salaries from the foundation. He can use foundation money to travel for charitable work. He can host galas and events. He gets praised in the media as a philanthropist, while actually saving millions in taxes and still controlling the money. Don't get me wrong, some wealthy doggies do genuine charity, but the tax system makes it more profitable to donate than to pay taxes. The government is essentially subsidizing billionaire doggies to control their own money through foundations. Now let's talk about why this makes Charlie so angry. Charlie pays 30% of his income in taxes. That money funds roads, schools, hospitals, and the military. Charlie is contributing to society. He has no choice. The government takes the money before Charlie even sees it. But Rich Doggie, who has 50,000 times more wealth than Charlie, contributes nothing. Rich Doggie uses the same roads that Charlie's taxes paid for. Rich Doggie's businesses benefit from workers educated in schools that Charlie's taxes paid for. Rich Doggie is protected by a military that Charlie's taxes fund, but Rich Doggie himself pays zero. This creates a massive problem. When billionaire doggies don't pay taxes, the government has less money. So what does the government do? They raise taxes on working doggies like Charlie, or they cut services that Charlie depends on. Charlie pays more and gets less, while Rich Doggie pays nothing and benefits from everything. Look at this chart showing tax rates over time. In the 1950s, the top tax rate for the wealthiest doggies was 91%. Today, many billionaires pay less than 5% because of these loopholes. The tax burden has shifted from the wealthy to the middle class. Some people say, but Rich Doggie created jobs. He built businesses. He deserves to keep his money. And yes, Rich Doggie did build businesses, but those businesses use public roads to ship products. Those businesses hire workers educated in public schools. Those businesses are protected by public police and courts. Rich Doggie didn't build his wealth in a vacuum. He built it using infrastructure that everyone's taxes paid for. Here's another thing that makes Charlie angry. When Charlie makes a mistake on his taxes, even a small one, the tax collector doggie comes after him immediately. Charlie once forgot to report 500 biscuits in side income. He got a penalty of 200 biscuits plus interest. The government is very aggressive about collecting from working doggies like Charlie. But when Rich Doggie uses complex offshore structures and aggressive tax strategies, the tax collector doggie barely investigates. Why? Because Rich Doggie can afford expensive accountant doggies and lawyer doggies who make it very difficult and expensive to audit him. The government knows that going after Rich Doggie will cost millions in legal fees and might not succeed. So they focus on easy targets like Charlie instead. This is what people mean when they say the tax system is rigged. It's not that Rich Doggie is doing anything illegal. Everything I described is perfectly legal. That's what makes it so infuriating. The rules are written to benefit the wealthy. So what can be done about this? Some doggies propose changing the law to tax unrealized gains, but Rich Doggie's lawyer doggies say, that's unfair. You're taxing money I haven't even made yet. Some doggies propose eliminating the step-up basis at death, but Rich Doggie's lobbyist doggies fight hard to keep it. Some countries have tried wealth taxes. Instead of taxing income, tax total wealth. If you own more than 50 million biscuits worth of assets, you pay 2% per year. But Rich Doggie just moves to a different country or hides assets in complex structures. The problem is that Rich Doggie has power. He can hire lobbyists to influence the government doggie, he can donate to political campaigns, he can threaten to move his business to another country if taxes go up. Working doggies like Charlie have no such power. Charlie just pays what he's told to pay. Now you know the truth. Now you understand why Charlie pays 30% while Rich Doggie pays 0. The question is, what are we going to do about it?